What's going on, guys? It's GBP baby. Welcome to another video. It's currently 2 a.m. 2:08 a.m. on Friday the 1st of December, and I want to start this video by saying that I just want to say thank you for everyone that supported me this year. Thank you to all the new subscribers for sticking around, and that this is going to be my last video of the year, and I plan to return in January. So yeah, I do have some backtesting videos that will be dropping throughout the month of December. However, I'm not actually going to be doing these daily reviews through that month, as I want to take a break, get out the charts, and just I need a break in general. So let's get straight into things. You can see that price reacted fantastically as we anticipated. Make sure to go check out yesterday's video if you haven't. We can drop down to the daily, and we had an expansion just as I called in yesterday's video, which is excellent to see. Now we have actually already gapped down, which is a bit crazy, but I do want to see a continuation to the upside. I'm looking for this rejection block to get traded to, but if we go with the weekly, I'll just quickly mark out a level as well. So you see the low of this week here. I'd like to think that we could trade into that, so I'm going to mark that out in black. And then if we drop down to the daily, you'll see that's nearly in line with that rejection block. This here, this wick, is a rejection block, and that's because when this wick traded into this range, you can see it turned away from it. So I want to see if price can reach up into this range here, and I'm just going to make that orange. But yeah, let's drop down to the 1 hour, and we can have a look at how price traded. Just as expected, we expanded higher. Expanded higher during the London session, running up, taking out Tuesday's highs, and then we also managed to reach for Monday's highs, which is great. And you can see now we're just in a slight pullback, but again tomorrow I anticipate a continuation to the upside. Now let's quickly look at the news releases today. We've got 3 high impact news releases and the Fed Chair Powell speech, so that's all going to be at 8:30 again, so we can expect a lot of volatility at that point. And yeah, in terms of the low of the day, I don't really want to see price come below this wick here made at 8 a.m. Let's drop down to the 15-minute and I'll explain why that is. Now the reason is because you see how this level came down at 8:30 and grabbed out these stops, this sell side liquidity here. That to me now means that this level is defended, so price shouldn't need to come back down here, as we've already grabbed the stops from there, and this range should now provide support for higher prices. Because remember, I am bullish overall. I want to see us run into this weekly low, and again we have that rejection block within this box here. So if price is to come back below this low, then I do think it will mean something out. So we're probably bearish, but I would like to think that this can provide us some support. So in terms of being able to plan our day, we can look at the hourly and we can look at the wick in general. So we got this long wick that came down at the 8:30, traded into this fair value gap, filling it. I'll just draw that out like so, and I'll make that blue. There you go. So it traded down, closing in that range, which is another reason I think price is likely to carry on higher, because we've now got a fully traded range. So we traded up on the upside, downside, and then you can see we're continuing higher again, running into Monday and Sunday's highs, which is great. Also, we now have relative equal highs in general. So this high and this high, although this high is taking out this high, these are creating relative equal highs, so price is likely going to want to sweep them. And we can also look at the 50% level of this wick, giving us consequent encroachment, which would be the lowest I'd want to see price trade to. So let's just get that consequent encroachment marked out for the Friday, just so that we know. We can put C.E. And now when we drop back down to the, let's go to the 15 minutes, sorry, we know that price should want to respect this bullish order block, so that might be a buying opportunity on dollar. Also, there's this swing low here, so there's going to be stops residing below there, and that's why I believe it's going to accumulate its stops before moving higher, and again, like I said, running into that rejection block. If we go back up to the daily, although I've got the rejection block marked out, it is possible that price does reach higher than this. So if we are very bullish, it will simply trade, it will run that stop completely and run into the buy side, into the bearish order block here, but yeah, like I said, it is considering it's the start of December, it's the 1st of December, and we should probably have a much more broader look at what we're expecting in the month of December. But you can see it's already gapped down. I am expecting a bearish month, meaning that I'd expect the high of December to be made in the first 2 weeks, but like I said, I'm not actually going to be here for it, so I'm gonna have to leave that to you guys. But yeah, overall, again, thanks for let's go over to GBP USD. So GBP also delivered great to the downside, just as anticipated. We took out Tuesday's low. I do believe we are going to go into Monday's low because we have a nice imbalance residing right here, so we can mark that out in orange. Right now on the Friday, we're just retracing upwards. Let's look at the 4 hour. I did actually trade GBP USD. I did upload the video of the trade execution, so make sure to go check that out. But you can see that we have a nice mitigation block, high, low, lower high, and then we've broken lower, making this level a mitigation block. So price may want to trade into that level in order to mitigate itself before then trading lower and running into these lows. And like I said, we have that daily fair value gap in this orange box. Let's go to the hourly. Again, you can see that level marked out. We have already traded to it on this wick, so, and we also have a rejection block here as well. So price doesn't necessarily need to trade back into this mitigation block, but overall I'd like to think that price can sweep down and start aggressively trading lower, running into that imbalance. So yeah, really not much going on. And what today, like I said in my video which I posted today, I actually traded the move into this swing high here. So if you go watch my video, I traded the New York Open running up, creating the manipulation, and then we had the 830 news which snatched out these highs here. Again, defending levels, so I believe that this level is now defended. I don't want to see price come back above this level, and you can see we've aggressively traded lower, and now we're just simply consolidating. But I'd like to think again, like like I've been saying, that we'd expand lower in the new day. Let's go to Euro USD. Let's go to daily. Euro USD, same thing, moving lower. Now Euro USD's has managed to take out Monday's low and Friday's low from yesterday and Thursday's low from yesterday. So I'm expecting us to now trade down into this wick, because wicks are ranges too, guys. We can mark out consequent encroachment as a target for Euro USD. Let's just mark that out, 704. Like so. And then if we go to the 1 hour, you can see our price delivered beautifully to the downside. Again, defending levels. Why this swing high got grabbed, so now that level's defended. I don't want to see price return back up there, and we've also got a nice breakaway gap by the looks of things, so I want to see this level get left open, that as a breakaway gap, which will allow us for continuation to the downside. Again, running into this swing low here and potentially into these lows here, where we've got a massive liquidity pool, volume imbalance, liquidity pool. So if Euro is particularly weak, it will run straight into these lows down here. But at least we have three targets to meet first. We have the consequent encroachment, where we're likely going to get a reaction. We have this swing low from Wednesday 22nd, and then we have this swing low from Friday the 17th, and then we have that massive liquidity void I was just speaking about, with a great fair value gap residing just here for us to trade into and fill. Let's quickly look at the 4 hour though, just to see. Again, you can see the swing lows. We've just filled in this fair value gap, and yeah, I'd like to think that we can trade down and start filling this liquidity void. Let's go on to Euro GBP very quickly just to see. You can see that Euro's been moving. Oh, this is all the back testing I've been doing, guys. You'll see that in December. But you'll see that Euro's been moving lower, showing a lot of weakness in Euro GBP. Let's just quickly run up to the weekly, if it's readable. Sorry about all this mess. But we've just taken out this low. So Euro showing this much weakness will probably be the better pair to trade. It's likely going to want to dive deeper into this low. So with that in mind, we know that on the Euro USD, we can expect a lot more weakness. And like I said, the likelihood of us trading into this liquidity void what we can do is we can actually mark out the 50% level of it, and you can see the 25% level of it has already been delineated with the 1 hour fair value gap. So you can see how things are starting to line up on multiple time frames, and that's when trades and just trade ideas are the best, when they line up with each other amongst multiple time frames. So that's going to be everything, guys. Again, thank you so much for watching. Thank you so much for subscribing. I'll see you guys in January, because like I said, I'll be away for December. I will have backtesting videos dropping throughout the month. I might replying to comments, I'm not sure, but I wish everyone a Merry Christmas, a Happy New Year, and I wish wellness upon everyone. God bless, and I'll see you in 2024.